Hey, this is Jack. I wanted to do a little presentation of days that were similar to today. By today, I mean Friday, May 16th, 2025. We had a spike in channel that lasted most of the day, but it didn't start until around, I don't know what this was, maybe around 11 o'clock or so. But we had an opening trading range, failed bear breakout, strong reversal up, turned out to be a spike, and that led to a small pullback spike in channel pattern that lasted most of the day. We had a trading range day at the end of the day yesterday, so you expect that behavior to continue into today. We got an opening reversal, wedge top, bull channel, that's a bear flag, double top with yesterday's high. We kept failing the breakout here, and ultimately we got a bear spike to the downside. Now you might be thinking, because we have an opening range that's about a third of the day's range, it's likely we'll get a breakout and the range will double. So when you get that bear spike, you might be thinking, okay, maybe it'll be a bear trending trading range day. But that reversal up was relentless buying. The bar just kept growing, small pullbacks all the way up through each bar. And when that happens, you got to be thinking that this is a spike and we're going to test back up to here at a minimum. This spike was a spike in channel to here, corrected down to a breakout test. And that happened over and over throughout the day with open gaps. And whenever that happens, that's a sign of strength. That's a sign of a very strong trend day. Now, me personally, we had enough opposite pressure and bad follow through here that I thought it was likely we would have more of a trending trading range day than a strong trend day like this. So of course, I leave my desk around this point because now I'm thinking, okay, we're probably going to correct down to here or here. It's probably going to be confusing and tricky. And that's usually about the time I call it with my trading anyway. But obviously it led to several great with trend setups for the rest of the day. So I think it's important to just understand the different variations, the different ways they can look. I'm going to try to keep the video short and run through a bunch of examples with you. So here, opening trading range after a big gap up, led to a spike here, pullback and channel. Broader and flatter, holding above the moving averages. Consecutive bear trend bars, but really not that strong. Bull trend bars, maybe a little bit stronger. Through here, certainly stronger, even though they look weak and they're overlapping. It's a sign of time control. Not a very similar day as today, but functionally, bear spike and channel led to an overshoot and a correction up. Maybe a wedge here. Attempt at trend reversal or trend resumption for the bears here. Strong spike up, failed. So trading range, probably more useful to think of this day as a trending trading range day. But in any case, around noon, middle of the day, after the trading range has gone on a while and the breakout has failed for the bears, we get a strong reversal up. That reversal up was a spike. Looks pretty good, huh? I mean, closing on the high, not much overlap, minimal tails. That's a strong spike. Here, a little bit more climactic. Tail, huge body, deep pullback, tail, smaller body, smaller bar. More climactic here. Here, more uniform buying pressure. And the pullback does not look very strong at all. It's a breakout test with some overlap of the breakout point, but maybe we're testing something else, like the close of this third bar. You can see after about 4 bars, we reversed here. Then 4 bars down, we went sideways. Then we were alternating. We had 3 bars down. Here we had 1, 2, 3 bars up, and then, oops, a 4th bar up. So that broke the rhythm, and that might explain the breakout test of that close. Markets are symmetrical in many different ways, and there's many different variations of everything. And I think it's important to understand all of that and be open to all of it. So strong spike led to a channel, broader and flatter towards the end of the day. Strong spike up led to a double bottom, maybe a wedge channel first, then a double bottom test of the open, which is common on a big gap up day, or big gap in either direction. Double bottom, double top with the open, and then a rally, which led to a channel that lasted most of the day. The channel was a spike and climax. Climax tested the midpoint between the 2 climaxes and formed another channel. Many different ways to look at it. Wedge bottom, big bull breakout, breakout test. Strong reversal up, but bad follow through, opposite bars. Not very clear through here. Finally, spike, and a little bit more clarity, pullback and breakout test with an open gap. That led to a channel up. Deep pullback here, breakout test again, led to resumption into the close. And spike and channel patterns often take place over multiple days, just like this past week. Big spike up, double bottom and channel, or you could say big spike up, pullback, channel, trend resumption here. Same thing here, big gap up, double bottom, pullback, channel, trading range, spike, pullback, channel. Small opening range, probably the range is going to double. The spike is strong, not much overlap. Some tails, but I wouldn't say prominent, and I would say pretty uniform buying pressure. It doesn't look too climactic, maybe until this here, this overshoot. So you expect to pull back, but functionally, spike, pullback, channel, 1, 2, 3, correction to a trading range, test of the start of the channel and the breakout point, led to another channel, which was a spike and climax. Spike and climax will function like a spike and channel. You expect a correction back down to the middle of the two climaxes or to the bottom if it was super strong. We tried to get there, didn't quite get there. Breakout test, and then trend resumption into the close. Probably better to think of this day as more of a trending trading range day. This day as well, too much strong opposite pressure. So probably not a strong trend day, probably more of a trending trading range day. So you could say we have a trading range here, fast breakout, trading range here, fast breakout, trading range here. Lots of selling pressure into the close of the prior day. That will probably show up in some form or another today. Big gap up and weak channel led to a trading range. Ultimately a big bear breakout and spike and channel pattern starting around, looks like 1:30 p.m. Opening trading range turned out to be a spike, pullback, channel, or maybe you could say this was the spike, pullback, and then weak channel into the close of the day. Trend from the open after bull channel, which is a bear flag. So spike, pullback, and channel lasting all day. This is the strongest type of trend day, a small pullback trend day, which is similar to what we had on Friday. It's certainly a variation. Trading range, it will be hard to escape that magnet. Whatever breakout we get, we'll probably retest either the highs or the middle or even the lows. Gap up and trend bars, consecutive strong bars here. So spike and channel evolved into a trading range, and then the bears got the same. Spike and channel down, failed bear breakout, and reversal and trading range into the close of the day. Strong spike here, pullback, and weak attempt at a bear channel here. Maybe you could say spike and channel here, and then for the bulls, spike and channel there. Trading range, small spike and channel here. And for the bulls, reversal up, spike, pullback, and channel. But the channel looks climactic. We have a climax here, climax there, climax there. So very climactic behavior. Looks like a trading range, breakout. Maybe you could say spike and channel. These are the 2 days that we just looked at. But it's important to look at the zoomed out picture because this takes place over multiple days, and usually the open of each day is related to the close of the prior day. Strong selling into the close of the day carried over into today, but it turned out to be a trading range. Strong buying here, a little bit there. Bear breakout, but really not that strong. Yes, spike and channel on a smaller time frame. 1, 2, third reversal up with consecutive bull bars and then a big surprise bar. Big tail, but that tail on a smaller time frame, likely a bull flag. Turned out to be a spike and channel pattern. Trading range and triangle, continuation patterns and strong trends, and this is certainly a strong trend. So it led to a second leg up, and the second leg was subdivided into 2 more legs. Reversal day, strong trend in one direction, then a relentless trend in the other direction for the rest of the day. Variant. Also a trending trading range day, spike and channel day, not so much a small pullback trend day. Here, big gap down and a weak channel down. This is more of a textbook small pullback trend day. The reversal setups look strong. Look like they're going to get far, but they ultimately fail and become flags for the with trend traders. Trading range, strong spike, pullback, and channel. Trading range into the end of the day. A lot of opposite pressure here, prominent tails. It's tough. Nothing is ever clear. You're never as certain as you want to be. Everything's a gray fog, right? Big spike and channel pattern over the course of a couple of days. Here's a zoomed in version of that pullback. So you could say spike and wedge channel here. Strong bull breakout of a bull channel, likely to reverse in a few bars, and that's what we got. But the reversal turned out to be a trading range, and a weak bear channel. You can say maybe a strong spike up right here and a pullback and then a relentless channel for the rest of the day. Profit taking breakout test of these highs at the end of the day. Big rally, big sell-off, big trading range, but consecutive trend bars on the open, even though they have tails on a smaller time frame, that is a small pullback trend. So a spike and climax pattern, at least 2 or 3 climaxes in here, the channel being one, this single bar being one, and then this opening drive being one, likely to test back down to at least the start of the channel, maybe down to here, maybe all the way back down. And that's kind of what the bear's got. The bear's got a wedge channel here. We tried to get trend resumption, but it ultimately turned out to be a lower high major trend reversal, which led to a spike and weak channel pattern and trading range into the end of the day. Trading range, failed bull breakout up here, strong spike and channel pattern. More of a trading range here, small here, another trading range here. So useful to also think of these days as a trending trading range day. When they're stronger, it can be more useful to think of them as a stronger type of trend day. Even days like today, this day, strong spike and channel, but this channel was mostly a trading range here for a couple of hours. And then down here, yeah, channel, but we tested back up to here. So it's really a trading range for most of the day. But you do have brief breakouts. Big gap down, wrong direction. We got reversal up here, that's a double bottom variant. Strong spike up and a pullback led to a channel. Market cycle reset here in the trading range, and we got a strong spike and another channel at the end of the day. Big up, big down, big confusion, failed breakout of a trading range with consecutive trend bars. We're probably going up here at a minimum. Buy the close for a spike and channel. Deep pullback here makes me think probably sellers a measured move above and enough selling pressure to put the market into a trading range. So you got to be thinking that whatever trend we get may not last all day and we may get a deep correction. Usually on strong trend days, this deep correction is twice the size of this pullback, and it usually comes around 2 or 230. But here, certainly a trading range day variant, but also a spike and channel trend from the open, small pullback trend variant as well, at least for half of the day. Big gap down, less likely to lead to a strong trend and more likely to lead to a trading range day variant. And that's what we have here. Spike and wedge channel to the bottom. Reversal up, wedge channel, formed a trading range, and then mostly sideways from that point until the close. But still, a spike and channel variant. Spike and channel here, spike and channel there, spike and channel for the rest of the day. Small opening range, breakout, reversal attempt. Probably better to think of this day because of this opposite pressure. Better to think of it as more of a trending trading range day than a spike and channel day, especially with the big gap down. Big gap up, we have a bull flag from the end of the day, the prior day, it's weak, and we have a big bull breakout with consecutive bear trend bars on the open. So that means probably we're not going to get very much higher before we test back down to here, but we do have a strong spike. Well, we do have a spike. Ultimately it failed. The bears got a much better looking spike here, and that correction led to a channel that lasted most of the day. So it looks like the bears got a little climactic here towards the end of the day, formed a wedge bear flag, and that led to a trading range. Ultimately broke to the upside after some news, and we got a measured move up of the spike in the channel, a measured move up of the spike in the form of a channel. A lot of trading range price action at the end of the day yesterday, carrying into today, forming a triangle. And that triangle led to a spike and channel pattern that lasted most of the day. Big gap down functions like a spike. This functions like the channel. Trading range here, but ultimately led to another spike and channel pattern. Bear channel, but weak. Lots of reversals up. Bad follow through. Strong spike into the close of the day. On the open, we have a test of support, the moving average, the breakout points here, and a strong spike up. Spike and climax. Sideways, you can look at this as spike and channel. Big up, big down, big confusion. We've got a triangle here, a bear breakout, and then a channel to the low of the day for a 2 p.m. reversal. And that reversal was a strong spike and channel pattern that tried to get to the high of the day but didn't quite get there. Strong spike at the end of the day, pullback, tested the breakout point, started the channel, and that led to a broader, flatter channel. Ultimately broke to the upside again, spike and climax, which went sideways for the rest of the day. Wedge bear flag, more of a trading range than a trend. So we got a bull breakout, and we formed a wedge bull flag test of the breakout points here. Strong spike and climax that went sideways for the rest of the day, and a reversal test of the open at the end of the day. This was a few days ago. This was also a few days ago. Tight trading range towards the end of the day yesterday with a strong rally into the close, and that carried into today. Most opens are related to the close of the prior day. Strong spike up. You do have some, a doji, bear bar, but this is functioning like a spike, and this is possibly the first pullback. And that might be a spike and climax pattern, but this whole thing is a spike, and it's likely to lead to a channel, and that's what it did. Ultimately, we got profit taking into the close of the day and a test back down to the start of the channel. Small opening range after a failed bear breakout of a trading range at the end of the day yesterday, so likely to get back up to these highs, maybe that close. We tried to here, and the bears wanted trend resumption, but the breakout failed, and we got a strong reversal up. Spike and climax, what turned out to be one simple spike, pullback, and channel, and that evolved into a bigger, broader trading range. We do have a fairly broad opening range here and a fair amount of opposite pressure throughout here, so that's likely to show back up later in the day. Broad channel kind of carrying into today. You could look at this as a spike pullback channel. Correction to 2:30 p.m. Tight trading range will be hard to escape the magnetic pull, pulling the market back into this range. So the bulls got a failed breakout. We're testing the bottom of the range, and ultimately it broke to the downside. For the bears, they got a failed bull breakout of a trading range and a strong spike and channel pattern. That broke to the downside and reversed very quickly, forming another spike and channel pattern. Sell off into the close, two-legged rally to a double top bear flag, breaking to the downside. So double bottom, bulls trying to get the breakout, but the bears getting trend resumption. Much sloppier spike and channel day. You could look at this as maybe the spike pullback channel, but probably more useful to think of this day as a trending trading range day. But every strong trend day, like a spike and channel trend day or a small pullback trend day or a trend from the open day, all of those days have trending trading range day characteristics. So it's important to keep an open mind. Think about that. Think about both cases. Trading range, end of the day sell-off, but weak, big gap down. Spike is a spike in the form of a gap, and then channel, broader and flatter for the rest of the day. Bull channel ultimately got a strong bull breakout and a measured move up. Spike and channel here, corrected to a trading range, sideways to down for the rest of the day. Trading range here, failed bear breakout, small opening range, likely to double. Failed bear breakout, maybe we'll break out to the upside. Strong spike, spike and channel pattern for the rest of the day. Not a terribly deep pullback here, but if you remember that depth, you're likely to see one pullback 2 times the size of that, around 2 or 230, and that's what we got around here. So strong buying into the close of the prior day, but it's climactic, therefore unsustainable, hence the strong sell-off on the open. As strong as this looked, it ended up reversing and forming a spike and channel pattern that lasted the rest of the day. We don't have a deeper pullback around 2 or 2:30 p.m., and that's probably because this day is likely more productive to think of as a trending trading range day rather than a strong spike and channel trend day. Because of how much opposite pressure there is, because of how large the opening range is, and yeah. Strong spike, pullback, wedge, bull flag, and channel, but weaker. Here, trading range, failed bull breakout, climactic, several pushes up, failed bull breakout of a bull channel here. Strong reversal down, triangle on the open, led to a bear, spike, and channel pattern. But the channel wasn't that strong. Strong buying pressure here, strong buying pressure here, here. So once we broke that channel to the downside, got the overshoot, and you get the strong reversal bar and follow through, even though it doesn't look that strong, you got to be thinking that we might test back up to here. And that's ultimately what we got. For the bulls, spike and channel evolved into a trading range. Tight trading range into the close of the day, big gap up, consecutive trend bars, likely to go higher, and it did in the form of a spike and channel pattern. This was Thanksgiving, or the day right before Thanksgiving. 4th of July, Christmas, Thanksgiving. Usually the only normal behavior of the day is during the opening range. And you can see over the course of a couple of days, that channel, that spike and channel pattern continued. I mean, you know, and if you look at this day, when you get this breakout of that low that fails and reverses up, you got to be thinking, man, we might get a new high for a bull channel. And that's what we got. Big spike, double bottom bull flag, and a channel. You could also look at this as spike, pullback, channel, failing above that high and reversing down for the bears, spike, pullback, weak channel. So sell off into the close, not terribly convincing, but a small pullback trend, more than likely on a smaller time frame. Strong reversal up, we might need to test that high for a double top, bear flag before we resume the trend. So spike, pullback, channel. Sell off into the close of the day, but climactic and likely to get a reversal after this overshoot here. So double bottom and bull bar, reasonable to buy above. Big gap open, functions like a spike, channel, evolved into a trading range. Trading range at the end of the day yesterday, big bull breakout. A lot of opposite pressure on this day. So we have a bear bar, first bar, failed bull breakouts, third bar, failed bear breakout, fourth bar. A lot of trading range price action in the first few bars, and that's a signal of what the day is likely to become. Strong spike with bad follow through, a lot of overlap, and failing above the swing point here with a strong reversal down. Opening reversal led to a good swing, and if the day has become a strong bull trend day, the bears shouldn't have gotten this swing. So this day is better to think of as a trending trading range day for that reason and the reasons discussed there. But in any case, it was a double bottom, and we got a strong spike up, which led to a sideways correction and then a channel up. Ultimately, it corrected back down to the test of the start of the channel and the breakout points and the expanding triangle middle, the middle of the expanding triangle. Big news day, so we had a spike pullback channel, corrected to a trading range until we got news, and then the bears got a big spike and channel pattern that lasted the rest of the day and covered many, many points. So sell off into the close of the day. Looks like it's starting to overshoot the channel here. Strong reversal up with consecutive trend bars. We're probably going higher, but we got a double bottom and then a strong spike, reversal up, spike and channel pattern that lasted most of the day, corrected to a trading range. For the bears, the trading range evolved into a spike and weak bear channel for the rest of the day. So bear channel, bull flag, we've got an overshoot here and a strong reversal up. I remember this day, I was long in here. Strong reversal up, functioned like a spike, pullback, and channel. Market cycle resetting again here for the same thing. For the bears, deep pullback around 230, spike, pullback, channel, overshoot, and then double bottom, reversal up, another spike and channel into the close of the day. Here's Christmas and the day after Christmas. This is Christmas Eve. Spike and channel, evolved into a broader channel. Here's a close-up on the day after. We have a gap down, but a bull bar. And a lot of overlap, tight trading range. So this breakout failed and reversed up. And that reversal up probably functioned like a spike, pullback, and channel. Channel corrected into a trading range for the rest of the day. So probably because of the overlap and tight trading range and the big opposite pressure on the open, better to think of this day as a trending trading range day rather than a spike and channel small pullback trend day. Rally and trading range at the close of the day. So we got a big bear breakout. Not a lot of strong consecutive trend bars and getting reversals all the way down. So for the bears, we got a wedge bottom, for the bulls I mean, and then a strong spike and channel pattern that lasted most of the day, evolved into a trading range towards the end of the day, and ultimately the bears tried to get trend resumption after a test likely of the breakout point. Bear channel, trading range, fast breakout, another range, fast breakout, trading range for the rest of the day. So trending trading range day, but functionally, you could think of it like, maybe the spike is somewhere in here, this move down, this is the pullback, and then this is the channel down. It's just broader, flatter, more trading range behavior. Better to think of this day again as TTRD. And that's the end of my review. And just to cover what happened on Friday the 16th, we had a trading range into the close of the day yesterday. We have a lower low here, and we tried to get a higher high here, but it failed and reversed down. And I believe this high, no, I think that was above, it's above yesterday's high. So I don't think we had a very clear bear channel on this time frame, but on a higher time frame, we did have a wedge bear channel that turned out to be a wedge bull flag. And so we had a small trading range on the open. This is about 20-25% of the average daily range. So you're expecting a breakout in the range to double at a minimum, and you may be expecting a strong trend day. But anyways, the bears got a decent looking spike, ultimately failed and reversed up. And for the bulls, we got a spike and channel small pullback trend that lasted the rest of the day. So that's my review. Day structures that were similar to today. Thanks. Bye.